B52s.
Yeah. I hope they turn up this time.
Assuming they turn up.
B52.
Yeah, it'd be superb.
In Sacramento by Baything Force Base, you used to see them coming into land. They go like this as they come up. It was the whole wingspan. Just like, oh, how is that flying?
Exactly.
Wait till they bang into a house.
I was standing.
When the engine falls out.
Well, they've got 7 spears.
Standing on the tarmac at Christchurch Airport when one of those star lifters came in from down the ice. Little did I know at the time the sun was on. But and they're rushing us off the tarmac because I came in one of those turboprops. And I said to them, say that on. Well, it was just looked like a hotel coming in sideways.
Well, I went out and saw that the first, that really, what's the biggest plane? That it was an Emirates plane that landed in Christchurch.
Oh, yeah.
380.
Yeah.
380 or something. I saw that band, and that was just, that was like a 3-story building, 4-story building.
Okay, I'd like to check with, you know who.
But Danny said he came back on it from the ice. He said you could play tennis across it.
Yeah.
It was that huge.
No, I've got a copy of the minutes.
So what time is it due? What time is the B52 due?
I had to check.
Do they say? Do they give it? They must give it a time, surely.
Yeah, I haven't checked on that.
It's got to like from Sydney.
It's got to
Thought you were playing a tune.
It's now 10 o'clock, and so we can start. So first of all, health and safety procedures. In the event of an emergency, exit through the doors here and go onto the car park over the road. Toilets here, and I think everybody else knows the other procedure. First of all, apologies. We've got apologies from Anna Nielsen from Destination Wairarapa. She's just got a bit of a cold and decided not to attend today, but she will be coming back at a later date. The other thing I'd like to do is add to the agenda under B4, a new item which is risk register, and a further item under B5, which is just an information on the video for fire. So does anybody?
If I could say, I had spoken with Anna, and if you would like, I can speak to Anna's.
Oh, that would be good. Yes, I've spoken to Anna too, but she gave me a very brief, but
Thank you. So first of all, do we have any conflicts of interest? And today there's no public participation.
Good.
And is there any extraordinary business? So moving on to A6, so the minutes for confirmation of the finance audit and risk minutes of the 21st of October. Now, does anybody have any comments on those minutes? Anybody else any comments? So I'd like to propose a resolution that the minutes of the Finance Audit and Risk Committee held on the 21st of October 2020 are confirmed as a true and correct record. Can I have a second? And Councillor West, thank you very much. And all in favour? Those against? Right. Moving on to the proposed resolution that public excluded minutes of finance meeting held on the 21st of October 2020 be received in public. Thank you. And all in favour? Aye. So we need to do the second public resolution. Yeah, that's just confirming the true written. So then we have another proposed resolution that the public excluded minutes of the Financial Audit and Risk Committee held on the 21st of October 2020 be confirmed as a true and correct report. Councillor West. All in favour? So now we move on to B1, which is information and approval reports. So first of B1 is a corporate services report. So Katrina, can you give us an overview? Just before you do that, I'd like to thank you very much for a new report. It's really good.
Yep.
Yeah, very easy to read and understand.
I will pass it on to Charlie,
Yes.
she's the one, she was unable to make it today because we've got other things that we need to prioritise. Okay, so financial statements are up to December. Ideally, we would have liked them to be the January reports. However, time permitting, we weren't able to produce the commentary around them. We needed to prioritise the long-term plan process, which is fine. So from next month, the auditors here next week, the consultation document. So from next month, we'll be able to get into a regular pattern of providing you within the month, previous month's financials. There may not be commentary around that, but there will be a set of financials there for you to see. Okay, that's just prefacing that. So if we just go through what we've really quickly, and I'll just go through and highlight a couple of things in the report. So the investments, it's really challenging for us to meet the 30% rule, and we can discuss that further when we look at the investment policy, because I've made some proposed changes there. The reason being that it's often difficult to get signatures that are available to authorise other accounts. We've got some signatures on them obviously, but they're often not available in the office, and some other banks like to actually speak to the person if we're setting up a term deposit, which doesn't make a lot of sense to me, because if you're assigning authority on the account, then you're assigning authority on the account. So that causes us issues. BNZ have always are our bankers, and they've always been our preferred option for term deposits. It's also been quite challenging managing our operational cash flow this year, not in terms of that we've got enough operational cash flow, we always have. It's getting that balance between when we're going to need it, because some of our projects have gone over budget in the last little while. So it's been term deposits that we thought we could put for a year, actually we shouldn't have. We actually needed that money sort of within 6 months. So it's kind of changed the dynamic of where things are invested. I personally don't see a lot of risk around going over the 30%. I think there are better ways of mitigating risk. I don't think it serves any purpose to mitigate the diversification, because the chances, if you are wanting to diversify, then you diversify over a number of different financial instruments, not just term deposits. That's like false diversification in a way, because all of our banks are rated very similarly, and their all risk levels are the same as each other, which are quite low. The chances of the bank in New Zealand failing, or the government allowing a bank in New Zealand to fail, is quite minor. So I don't see that going over that 30% is a high risk or even a low risk to council, but I would like your comments on that if you disagree with that.
I wonder whether the policy is framed correctly. I mean, the financial institutions all have varying credit ratings, and some of them are extremely safe harbours. Is there any way of factoring credit rating?
Yeah, so that's what I've done in the investment policy, the amended investment policy, is I have focused on the credit rating of the organisation and not the fact that they're bank X or bank Y.
I think over the last 5 years, the government's increased the restrictions on banking to stabilise them following the famous 2007. So perhaps we need to look at that 30% ratio for the future to allow the CFO to have a bit more leeway with regards to interest rates?
Yeah, I mean, I'd rather be focusing on getting the best interest rate that we can and focusing on having enough liquidity to meet our operational requirements than focusing on, because not so much now because the interest rates are relatively similar, which is horrendous. But a year ago, we were foregoing 1.5% interest to meet that 30% threshold. And for me, that's doesn't sit right. That's illogical. I think we should be focusing on ensuring that the organisation has a really stable credit rating, but then maximising our interest rate.
There will be an opportunity to discuss this in a bit more detail further down.
There is in the investment policy, but it is good to have this discussion now.
Could I just ask, my thoughts on Australian banks at the moment with regards to the South Island, but whether or not we should be looking at increasing our usage of TSB.
Yep.
From an ethical perspective, and also the query, why are we not using KiwiBank? Are they not able to?
We have got the ability to use KiwiBank. They have in the past not given us favourable rates. Because we bank with BNZ will always give us the most favourable rates. ASB also give us quite favourable rates. KiwiBank have always said to us, that's our rate, which is our posted rate. We're not going to do any better than that. So I can have that discussion with them and sort of say, well, hey, if we want, that's the direction we want to go in, using sort of more New Zealand focused banks, then if we put more millions your way, will you give us more favourable rates?
And that's certainly a discussion that we have at a very high level, because it should be a trend that local government is moving towards, given
One of the issues with KiwiBank is often that they don't have a branch here. The closest branch is Lower Hutt. Shouldn't be a problem, but can be for some things, like opening bank account, getting signatories on accounts set up and stuff. It's really difficult because you actually have to physically go into the bank, which is really frustrating because you have to go all the way to Lower Hutt to get a signatory changed on an account.
it could be a condition of the change.
Yeah. Yes, so I can have those discussions with them around that. Yeah.
What are everyone else's thoughts? Is that a direction we should be going down, or should we?
I personally think ASB and TSB, it's good to support local.
Well, ASB is not locally owned.
That's Australia.
It's Australia as well.
Why is it so low for the Wairarapa Building Society?
Because their credit rating is a lot lower, because they focus on quite high, well, not high risk mortgage lending, but higher risk lending than banks do. So effectively, you go to bank first. If your bank says no, then you go to Wairarapa Building Society. Not necessarily the case, but that's kind of the perception, I suppose. So their risk levels are the highest, their credit ratings are lower.
Excuse me, Madam Chair.
Yep.
Not just at the moment, but going into the future. So that we don't end up in a situation where somebody has preference for one bank over the other, and all of our money sits in one bank.
So you see that as a risk?
I see that as a risk.
I don't personally.
But I see that as a risk. And I think that putting a figure in there that is workable for you and your staff would be a safeguard that I felt comfortable with.
Okay.
So whether that be 45%, because I see that's what you've gone up to.
Yeah, that's a bit high. I wouldn't want to go. That's not
My figure was 40. That we moved to there and then reporting anything over 40.
okay. So we can put that in the investment policy when we get to discuss it. If you want to discuss it, then I have reviewed a lot of council's investment policies, and just as a FYI, none of them have limits on percentages. But that's just they all focus on liquidity and credit rating of the institution, not how much the percentage is.
So how workable, if you have a percentage on it yourself, how workable is that going to be?
Oh, we can work it, we can, if you want to put a percentage on.
Without creating a lot of extra hassle.
Well, it's got to be in the 40 or 50%, to be honest. Yeah, and I come back to the fact that I don't feel comfortable sacrificing interest rate for either bank that I choose. But however, that's just my sort of thoughts on that. But I'm happy to, we could work with 40%. It's not often that it goes over that. It just means more juggling and discussions with different banks.
We've sort of looked at between 40 and 50%, but depends on, we don't go much over.
Oh, we don't go over, we don't go much over 40, but if we were talking about that, I would be comfortable with 50% because that would give me the flexibility. But we can discuss that later.
Does everybody want to discuss that?
Yeah. Okay, so we've got here the rates arrears, which are as of the 31st of January. So concerning, I suppose, here is highlighted there is the rural rates and that they have increased in terms of their arrears. So my thoughts around that are that they are more likely to be lifestyle than rural. Rural, of course, are more, their rates are a lot higher, so sometimes they can support number-wise in terms of dollar value that they equate for more per property than urban. So what I propose is that we look at what comes out. We've just had a rates payment due yesterday. We look at what comes out of that, and when Kirsty does her arrears report at the end of February, that she puts together a lot more analysis around the breakdown of why these properties are overdue at a level that obviously keeps the ratepayer's name anonymous, but puts some more detail around the reasons, because some of them may be that they're actually on a payment plan and they're all okay, but others might be that we can't contact them, or that and I think there is at least one that is going to be sold. So if you're happy with that, I can put some more analysis around the ratepayers that are overdue, and that's actually across all of the categories. I think would be useful, and we'll be tracking them.
To you, Angie, do we have a criteria for what determines a lifestyle block? Is it just merely the size of land?
It is the size of land, and off the top of my head, I don't know what that is, Brenda. I would hazard a guess of saying it's probably about 10 acres.
It is, but there are some 1 acre blocks within it too.
Yes.
And they'll be classed as rural as well.
Yeah. So lifestyle is classed as rural. I think lifestyle is 10 acres and below.
Yeah.
But yeah, they are rated as rural.
And do we have a way of determining or flagging?
So we have they're rated as rural, but they're categorised as a subcategory lifestyle, so it's quite easy for us to filter those and have a look.
And just a question, how many more people have you put on to pay than since?
So that's going to be a focus for this year. So it's still sitting at around 38% mark, I think it is, which is really high for our four councils. I think Masterton's target is 15%. So, and we're seeing these benefits of that across the whole organisation, to the fact that we're getting regular payments from people, to not as many people walking through the door and having to tie up time at reception. So I think there's benefits in direct debits and focusing and pushing in. So we've got a new officer in our team. She's replacing someone else, but she's very Maggie. She's really, she's going to be really useful and really good, and she's going to be focusing on proactively getting people onto.
And as a consumer, my compliments to Maggie, she's very efficient.
Oh, good.
So do we have an incentive to go on?
No, there is no incentive. Oh, okay, so the incentive is that you don't get charged penalties. So you don't get charged overdue penalties or anything. So you might be behind in rates, but you're not going to get charged penalties if you're on a direct debit.
That's provided.
It is provided you don't miss anything, although we are quite lenient.
It has the effect of decreasing your interest income, doesn't it?
That's right, but penalty interest is quite low. We're talking 30,000, 40,000. It's not. I would rather get the payments in and have a healthy debtors balance.
If you could you may not have that information, but if you could split out the arrears and the ones who really can see them.
Yep.
Not paying at all, having still an house and property. Do you have any feel for what percentage is distinct from just late payment, but they didn't pay?
Arrears are here somewhere. Rates arrears is the first graph you've got. So those are the ones that have rates owing from last year. So everything that is just outstanding is the current year. So the arrears are the ones that we, and they're of course, if you're in arrears, then you're also going to be overdue. So you're going to show on both graphs. That because we always pay off the oldest debt first. Yeah, so sorry.
I guess I'm really thinking the impact of COVID, how are you seeing it play out in rates?
Well, look, before Christmas, we didn't really see any indication when we were looking before Christmas. Now, I think, we're seeing those lines kind of split out a little bit, and it's a little bit more concerning for me. So, in terms of number of people ringing us, we're not seeing any increase in that. We're not seeing any increase in people who are under stress paying their rates. So we're not seeing an increase in those numbers coming through our system. I think this is more around dollars in number of properties, but as I say, I think if you give us another month, we'll do some good analysis on that so we can actually see what the real, if there is an issue.
Have you compared this with other years as to whether this is
so we've got last year, so if you look at the graph last year, the first is 2019, so this graph's actually 13 months for that very reason, so we can see that it is higher than, especially those that rural,
If we moved off from rates, but the average cost of borrowing, if I could move to that bit.
Yep.
Which is currently at 2.76. What does that change from last year?
last year would have been a bit higher, it's probably about 3%. The reason is because we've still got some debt that's in the 4%. Not much, actually, most of it's under the 4% now, I think, if not all of it. And the new borrowing is sort of at the 1% mark. So that the average is still sitting at 3%. As we move through the long-term plan, for example, that's going to go down to like about 2.5% in the first few years.
Have you done a cost benefit analysis breaking that and then reborrowing at a lower rate?
I haven't at this stage, no. I could look at doing that.
Could be some
We've got
gains there.
some spare capacity to do that. Our loans at the moment are structured, maximum term is 5 years, which is quite short for that very reason. We don't pay it back over 5 years, we roll it over until the useful life of the asset has expired, and then we pay the whole loan back. So yes, I can look at breaking some of them, but I'd have to do,
I understand the capacity, but also whether or not you also want to look at what the advantages at these historically low interest rates for looking past that 5 year period, as opposed to just 5 years and then rolling over. Yeah, that would be really good, I think.
Yeah. So 5 year interest rates at the moment are over 2%.
Yeah.
I think they're sort of 2 or 2.5 around there, I think last time I looked. So it's whether you want to borrow shorter term and pick up your 1% interest rate for 3 or 4 years, and then, or whether you want to spread that. So it's,
We're sitting at 2.76% average borrowing rate. So the
Is that with
charge,
the banks?
Yeah.
Yeah, LGFA is a lot lower than that.
How much is our borrowing with LGFA?
100% of it is with LGFA.
And their rate currently is?
So this is where it varies, but if we're looking in 5-year rates, it's about the 1% mark,
Yes,
1.2.
that's what I thought.
Yeah. And I think the prediction to the end of June this year is our debt will be, I think it's 23 million. Top of my head.
currently 22.
And our cap is 30, is it?
That was our cap through the long-term plan, but that's adjusted now. So as we increase our income, that percentage increases. So it's actually looking more around the 60, it's kind of double. This is one of the things that we'll discuss later on this afternoon, actually, hopefully. But it's all about the interest rate. In the last long-term plan, average interest rate was about 5%. This time it's a lot lower. So the higher the interest rate, the less your borrowing capacity is. So because it's just linked, that measure is literally just linked to interest revenue kind of component. And because it's going to be lower predictably through the long-term plan, then the amount that you can borrow is going to go up. But you do have to take that with a measure of, you have to be very careful in trying to max that out, because as soon as your interest rates go up, that debt ceiling comes down and suddenly you've breached it. So, yeah.
Can I ask, with LGFA, what sort of interest rate are they proposing for investments as opposed to what the bank is?
I don't know, top of my head, Pam, but the margin's about 1% higher than the borrowing rate. So, so that would be, yeah.
If they give
Or is it
them-
1%?
Yeah,
So.
you won't
have to
get a
look at
lot,
that.
you won't get a lot.
No, you don't get a lot, but it's very safe investment. Yeah. I don't look at their borrowing rates because I can't borrow for them. I can't invest with them at the moment.
Just remind me, so B and C, what are they offering in 5 years?
We don't usually look at 5 years. Our two deposits we roll over, maximum term is a year, and it's about 0.8. Don't even like saying that.
No, that's what I wonder. It'd be interesting to look at the cost of breaking some of the borrowing
Yeah,
to see what.
Yes.
over a short period, it probably wouldn't.
No,
Expensive.
because they're short-term loans, it's
Yeah.
usually if you've got a 25-year mortgage, it might be worth breaking it, but generally speaking, over those shorter terms, it's not, but I can look into that.
Because Auckland's had a problem that they borrowing it.
They borrow from overseas and they borrow massive amounts of money in futures and stuff, and they, so they're a completely different ballpark. Okay, so that's rates arrears, so let's move on from there. So Karen has put in the 2.4, a little bit of information there for you about employments. Now she has prefaced that with saying that we do need to look at what we are calling an employment. And for Kip, for your information, Local Government Official Information Meeting Act requires that any information that the public want from us is treated as an official request for information and needs to be recorded as such. And we have 20 working days to answer.
Okay.
Set some timelines. So these figures are quite low because we've just discovered that it's very difficult. You'll get a request from someone, they'll say, oh, can you give me this? And that should actually be an official request because we're providing information, but trying to capture all of those and record them is very difficult. It's like media requests. Amy gets 4 or 5 a week and she just flicks out information to the media. But Karen is sort of rightly saying that they are actually official information requests that should be recorded.
So then everybody that calls then slows down
Yeah.
the productivity of the council.
Yes.
Oh, absolutely.
It's hugely time.
So you do have to be quite pragmatic
Yeah.
about it. But I think we will start looking at recording those media requests at least as the going.
Well, that's interesting because I get media requests all the time and just answer.
That's right, exactly.
I was
So maybe
going to spit that through Barb to log. And in fact, a third of my emails are, I'm asking a question.
yes, so
It's unmanageable though, to manage them.
yes, so it might be worth having a bit of a meeting with Karen and kind of getting some clarity around what she expects of it.
So with regards to that, it could be perceived that the South Wairarapa District Council has been difficult because everything goes through the Wairarapa. Is that?
And then, exactly, and then effectively we have 20 days to respond, which we don't want. We don't want to be doing that.
But in the days of electronic requests, you could give, it's not like you have a letter and it's actually logged.
That's right.
Anyone can have a request
Yes.
very easily.
And unless
they
every
thought.
email or whatever that you've got, you're logging into a system.
It's the same one as I have for inward correspondence now. I get so few letters. Technically, in my mayor's report, it should be 100 pages long.
Yes. Yes.
I thought traditionally you had, when you requested, you had to actually state it was under there. Does that no longer?
Karen's understanding is you don't have to state that it's a Lagoima an official request, but
I think it was a ruling or last year, I think, from LGN said that any request for information of council is a look.
okay. It's a Lagoima.
I don't know, ruling, but advice from LGN.
But I mean.
I know.
Practicality wise.
Yeah.
So is the responses to these Lagoimas right across the whole council?
Yes. And
there's no one.
any information that we have in council is open to Lagoima. So my notes that I've got in here are part of Lagoima.
Have you ever worked out the time it takes?
Oh, no,
Well,
if you remember,
but-
if you remember, I asked last year to have a register
Yes.
where we could quantify the cost to council of Lagoima requests. And part of that was to actually itemise particular people who are burdening the council with, frivolous Lagoima requests.
Yeah. So we can actually charge people if it's,
A separate matter.
Yeah.
The smart ones change their matter very quickly, so.
Have we ever charged?
no,
No.
councils do that.
So could it be practical to say that if the council was to move down the Lagoima track, that a suitable call system be purchased?
Oh, absolutely, and that's what it would come with, but that's even quite hard because you've also got to record your emails as well. So I think we need some clarity from Karen, because this is, whole can of worms really.
But this is a council problem countrywide.
Yes,
Yes. So how are other councils doing it?
yes, exactly, and what are their parameters and what are they treating as Lagoima versus general kind of.
Do they have one person solely doing?
Some councils have teams of people, bigger councils have teams of people just answering Lagoima. And
Well, that's a huge cost on
It is.
council providing and stuff to do that.
So some of them take days to do, to get the information. Most of them are quite quick, and we should be charging for those ones that take a long time. And that I know is something that Karen also wants to look at some point, is putting some parameters around when do we actually start charging.
Then you give me the whole logistics and start charging. How do we demonstrate that it's actually taking that long to actually investigate?
A good example was recently Greytown Sports and Leisure wanted me to go back 10 years to find out what was used in the reserves and then 10 years forward of what was predicted to be used in the reserve. And I ended up having a sit-down meeting with them and saying, this isn't practical. I have to get all this information from archives. It's all, a lot of it would be paper copies, and I have to go through and put it together. It would literally take my team a week to do.
What do they say?
And so then it's getting down to why do you want this?
Yeah, what do you really do?
What is the
And what are you gonna
purpose,
do
and what
with
are you trying to achieve? And so they just wanted some sort of some, not certainty, but some thought given to how the reserves are being used for Greytown, around the sports fields and stuff.
Katrina, does the LGA allow you to charge?
Yes.
They do. Good stuff.
Yeah, it is, but you've got to balance it with providing a customer a service to our ratepayers.
And also transparency.
Yes.
You know, that's a barrier to transparency
Yeah.
for the average innocent, non-vexatious person. It's good that we provide.
Yeah, so there's
fair
that
comment.
balance, but yeah.
Is there a standard rate for charging?
I don't believe so. No, we don't, because we don't charge for it. No.
But we have a government, and South Wairarapa rate, our rate per person is sort of $53 an hour or something like that. 53, I think.
In our fees and charges, it's 148.
Cool, even better.
Good.
Wow.
I'll have to get Karen to get back to you on that, because that's not kind of my area of expertise, so I'm just kind of reporting on that. But we will develop that part of regular reporting to you about employment and.
It's a good stat to have.
Yeah.
Is that on the action items to just regularly report that? Is that something that should be?
I would suggest that it needs to come to you how often do we do that?
Every April.
Every 2 months.
So it really comes.
I was going to say quarterly, but
Yeah.
I mean, that could be.
So would everybody be happy for this to be in general reporting, or would you prefer it to be under an action?
it can easily be general and it could easily be at every far, to be honest, because it doesn't take long to put these figures together.
Can I ask for one more line on here, if it's not going to encroach on people's privacy? We have a situation where some people keep repeating what they keep on. So for the request, can we have the number of different people that have asked for those requests? So we've got 29 requests, but that might only be three different people that have asked for those, so that we know that one person is giving multiple requests.
I will, I'll pass it on to Sharon.
And if it's over 30% by one person, they should be named.
And charged.
Well,
That's it.
that was the request, to have a regular update on who is requesting.
And why? I mean, well, it's full part and parcel.
Is that a problem at the moment? Just a small number.
There's always the regulars. That generally will have an appointment around one.
You know who they are.
I do, yeah.
So if we can park 2.5.
I know one is.
Which is the investment policy.
Yeah.
If we can just park that, I think if we look at the financial reports, and then we can come back to that. So I'd like to open up the financial reports for comment. It's probably easier. I think we're tracking really well. I'm happy with the way we're tracking. There's no real concerns for me in the statements. They're looking really healthy, but just preface that with saying that included in there is the mayoral task force funds and the PGF funding. So Charlie and I are re-examining this month, and we may actually move that to a balance sheet item. So what that means is, what happens is we get the income and then we spend the money, but the timing is out. So it will potentially overinflate the surplus that we've got in the profit and loss.
Yeah.
So the other way of doing it is putting it on balance sheet, which means the income comes into the balance sheet, the expenses come into the balance sheet, and at the end of the year, if there's any balance up, then that is shown. So we will look at that, and we will make that very clear in our next report if we have done that, and we will also give you a bit of a rundown on where each of those are tracking. So the PGF will have a bit of a money in, used, balance, and the same with the mayoral task force. If you're all happy with that.
Yep. Yeah, it's a shame that sort of money, when you get PGF money, how much it distorts some of the smaller items. I know Kaipara was really concerned about mayoral task force jobs because they're in a smaller council, and they actually tried to remove it from their balance sheet to stop the distortion. Whether they're able to or not. But
Yeah, so that we remove it from the profit and loss and put it on the balance sheet.
Yeah.
So does everyone understand that concept?
Yeah.
Okay, good.
one comment, the mention there regarding the Featherston Community Centre 14K overspend, but you said, is that going to be reimbursed out of the PGF money, or is that a project management cost to us?
That's a very good question.
So I understand there was no project management fee included in the application.
No, there wasn't. I will have to go back and check that with Charlie and Bryce, actually.
But it says it's offset by the financial growth scheme. So will be a net cost. Yeah, will be.
What's that?
That's what you're talking about here.
Yeah, it does say that there's no cost to the SWDC, but I think there might be.
Yeah.
Yeah, I can give you some clarity around those at the next meeting.
Sorry, through you, Madam Chair. So that being the case, if it was not notated as part of the funding application, what is the responsibility of South Warra District Council?
Yeah, I mean, that's an interesting one. Some did, some didn't. So for instance, the Tahiririka Bridge did have a project management component where we're responsible. You remember that discussion we had that we noted that there was a risk associated with these projects. And the Marai renovations, we're project managing that, but there's a fee for us. And that was probably, I think, just an oversight at the time of putting through these projects through, and some required very little project management, like the Anzac Hall and the Mesopotamian Memorial, but I think there was a lot of discussion over the spend of the money for the community centre because there were so many different parts of it. So I'm not sure where our exposure is or whether we had to take that in as our council costs.
The challenge with the Featherston Community Centre is it's not our asset. Whereas the others are our assets. The officers' time is kind of built into the cost of the project really, but that's the discussion, is it's not our asset. Officers' time has been taken up and delivered.
But you're going to clarify that with us.
But I will clarify that.
What are the numbers about?
It wasn't much, 300,000 or something was my balance.
What's that for?
For the community centre?
Community centre with 260.
16.
Yeah, it was a good, it might have even been less than that, maybe 100.
Yeah.
It was very nice to have. Unfortunately, it has delayed a decision to be made over the risk of the trust and that asset falling out of public hands should the trust no longer be financially viable. There's a discussion opened up with regards to whether or not we should be holder of the asset and lease it back to them to secure that for community, because that's a very important piece of land now that the medical centre's opened up. That discussion, because they got this money, is now almost off the table because they've now had all this money. And they don't see, I still see the risk as still being there. Much like Harbour House.
Yeah.
It's just delayed the risk. I agree. Any other questions?
No.
It's got to come from me.
Yeah.
The under payables and accruals, we're talking about the Greater Wellington Regional Council rates.
Yeah.
Can you tell me, you said that they're payable and in advance.
Yeah.
So are we paying that to Greater Wellington before we've actually collected the rates from our ratepayers? Is that what you mean by that?
No.
Okay, so what can
We definitely don't. I've figured this out many times in my team and now I just have to reread it. So what that means is, is that some people actually pay us in advance.
Yeah.
So if people have paid us in advance for their rates, then we pass on the in advance part to Greater Wellington as well.
What is our income from collecting the regional rates on behalf of the Greater Wellington Regional Council?
Top of my head, about 50K a year we get.
What is the
Cost?
what's the cost? And what is the risk to us of being tied so closely to the Greater Wellington Regional Council reputationally?
Reputationally, yes, that is an issue because people see their rates bill, Greater Wellington's rates are on the rates bill, so therefore they just see it as South Warra District Council rates. Kirsty makes it very clear when people call in about that they are two separate issues, and that it's like when we're discussing rates in the long-term plan, we're only discussing our portion of the rates, and we have no control over Greater Wellington's portion and how they see that. They have their own consultation with the public, and
They call.
yes, and also people don't engage so much with the regional council, is my belief, because I don't think they think it's as it's very. Personally, this is my personal view, is I don't think people sort of see Greater Wellington as being separate and rating and being, you know, and having a rate. They sort of see it just as South Wairarapa District Council rates.
So,
and so, yeah.
So say we get, I think it is 53 or something thousand a year. What is our cost to collect on their behalf?
So it's really just an administrative cost to, because when we are collecting rates in general, that's part of it. So you pay your rates, part of your rates that you're paying to us is Greater Wellington rates. So, so that's our cost, and then it's there's an administrative cost of reconciling it and passing that money into Greater Wellington. So it is quite minor.
How regularly do we review that 53,000?
So there's a signed contract with them, and I believe it's coming up for renew next year, I think it is. So it's not too far away from coming up for.
Can we make sure we have a robust discussion about that?
Yeah, and it's
sign?
tied in with all the councils, so it's kind of that whole, all the councils for Greater Wellington sign the same kind of contract. But,
Sorry, Brenda. Sorry, I'll through you, Wendy. So if people were to protest against Greater Wellington Regional Council, for instance, and they decided that they're not going to pay the rates for Wellington Regional Council, we would still fine them. Is that correct? Would that be the correct?
yes, because our penalties also encompass Greater Wellington's portion of the rates. So we also pass on to Greater Wellington penalties remitted, everything that their portion of everything the ratepayers pay. So if a ratepayer says, I'm not paying my Greater Wellington rates, and to be honest with you, I don't know what we would do in that instance. I'd have to go back and check with Kirsty, but we would certainly still apply penalties to them, and those penalties would, if they were paid or not paid, be part of the reconciliation to Greater Wellington.
Interesting.
Yeah.
Cool. Let's review that next year.
I feel
Good
that
discussion to
we
have.
should get two invoices. We should get a Greater Wellington invoice and a South Wairarapa. How we collect.
So some parts of
the
country, like Waikato, for example, Waikato Regional Council, that's Waikato, invoice separately. They look after their own rates. And then all the Hamilton councils invoice their own rates, and it's a completely separate process. So you get your Waikato Regional Council rates and you get your Hamilton City Council rates.
Tararua and Tasman and Horizons do the same.
Of course, for regional councils, it's much easier if the council collects the rates, because then you get tied up in that whole. They don't have to deal with the customer complaints about how much their rates are. That's actually us that have to deal.
But also we get lumped into the two, the accounts.
Yes.
And that's a real risk to us, I think, from a reputation, given some of the actions.
So when this contract does sort of start coming up for renewal, because we'll get some headroom on it, I'll raise these concerns, because I know that they're concerns across the other councils as well. I'm sort of thinking, yeah, they have the same nibbles and the same issues.
Is it raised by the public though? Does somebody in all the calls to the council say, I'm not happy with this? The Wellington aspect of the rate?
No, I don't think so. Not yet.
But I still see a continuing problem of division of responsibility and clarity of different organisations. Because it's for 99% of ratepayers, that's the only contact they have with Greater Wellington is through our rates demand.
Yes, of course it is. I would agree. I've never contacted Greater Wellington.
Yeah.
Wouldn't even probably think about it.
Yeah, okay, I get that. Yeah.
I mean, there is the letter that goes out, which
Let's read it.
They don't read it. You know,
Is this an opinion or research?
But it becomes an issue for us when we've kept our rates as low as we can, but Greater Wellington haven't, and then people agree when we discuss our long-term plan that this is what we get, and then when the invoices are added together, there's this big carving.
And that's what I mean.
Much higher increase than they ever expected.
The public are much more engaged in the council's long-term plan and consultation rates, but less engaged in the regional council, because that disconnect really between both regional.
And I think the other problem is where they see on the regional rates, Wellington centric. And that's where often know.
Yes, and Kirsty deals with all of those, and actually, well, how we deal with those, we literally pass them on to Greater Wellington. So if someone starts discussing Greater Wellington components of their rates, it just gets passed on to Greater Wellington, Greater Wellington.
So all of the councils in the Wellington region, collect rates in the same way we do.
So how do we kick off this robust discussion?
Next year when the
When it
contract
comes up
ends.
for contract renewal, it's when we'll have that discussion.
It would be, it would be highlighted.
Yeah, all the other councils are similarly minded, but I'm not sure how difficult that will be, whether we'll get traction. Of course, we've got, we've got water reform coming up, and if that happens, and when that happens, that will be a third component. So it will be much the same way, or I see it as exactly the same as the Greater Wellington. You'll have a water component on your rates bill that the council doesn't have any control over.
So that would just be the catalyst.
well, to be honest, when the new rates come out, the complaints I get, 95% of them would be on the GW.
Yes, for rural, definitely, yeah.
This is not transparent, though, that's why.
Yeah,
Yeah.
exactly.
Well, I think it's probably transparent if you look into all the information and you become, you drill down into the application on it.
Not yet.
You have a separate page and when that first July one comes out, it says something about
Any other questions on the financials?
No. All in all, you've done a good job.
Look, this is looking really good. Yeah, to be honest.
Yes, it is.
If I line by line it, logical.
I don't have any concerns with there's nothing obvious in there that I'm concerned about, which is nice. Oh, yeah.
I've just got one question. So just thinking about the reserves,
Mhm.
are you happy with how that's in
The reserves in the long-term plan are going to be depleted somewhat because of the spend in infrastructure, and there's nothing that we can do about that. That's the reason that the reserves are there, is to use the growth, and that includes our depreciation reserve as well, which will be taking a bit of a
Yeah, but
hammer.
you got a note in there that there's an increase in the reserve due to the two big couple businesses.
That's the, exactly. So, and we don't have any control over that. It's very difficult. I've had some discussions with the planning team on how we forecast / predict what the contributions are going to be from developers, and it's very difficult because you can't really tie it to population growth. You can't tie it to building consents. And people can have, years to go from a 224 to a 224C. So we don't have a lot of control over that. We can just estimate it. But yes, you're right, there's a lot more income.
Yeah.
Looks like it's going to be coming into those reserves this year. Yeah, which is good.
And Kit, I've just read it for the third time, so.
Yeah. So with this, we've had another quarter, obviously, because these financial statements go end of November. Are you seeing any changes in the tone or feel or outcomes we're seeing?
Of the financials?
Yes.
No, I'm quite.
So it's tracking the same as we're seeing?
Tracking well, yeah, there's nothing in the next, up to the end of February that I'm concerned about.
So our next FAR will have the next quarter included?
So what I would like to do is send you out the financial statements every month.
Yes.
They won't have any commentary around them. They'll just be the profit and loss on the balance sheet effectively and the statement of cash flow. And what you receive, for example, what you receive in February, at the end of February, you should be getting January's accounts.
Good, very good.
We're up, this is up to the end of December now.
Yeah, yes it is, and yeah.
If you look at this, even with a $400,000 hit from the NZTA subsidy, it's still looking really good.
Oh, yeah, it's good.
That's the big.
It's tracking nicely at the moment, yeah.
Very good.
Could you speak up?
Sorry, Pam's just saying, if we use the money that's in our reserves, what impact's that going to have on our cash flow? Of course, it will have an impact on the cash flow, and that's something that I'm managing. And through the long-term plan, that is a very key component to how the balance between debt funding and reserve funding is managing that cash. So that is quite a big part of what I'm doing at the moment is analysing those cash balances. Yeah.
Definitely, yeah.
Manipulation. Yes. Okay. So if everyone's happy with those financials, we can move on to the investment policy.
Good.
Sorry.
Yes, sorry, investments next? Is it?
Yes.
Sorry.
Yes. Right now.
Just before we move on, can I have someone to want to receive the corporate services report? Can I have a second that? All in favour?
Aye.
Thank you. So moving on to
The investment policy, which is part of my financial statements.
Yep.
Yeah. So really minor changes to this policy. One is because of timeframes, we don't have a lot of time to spend on this, and two, because we are reviewing the rates, all the rates next year, and so this will form part of that review as well. So we're going to do a big review on how we rate, and these policies that are attached to it will also need updating. So I've made minor changes to this. However, I'm quite comfortable that the document for our size council and for what we're doing at the moment covers what we need to cover for the next 12 months. So that's my bit. So the bits of change, so this is in track changes, so you can see what's been changed, and we've discussed this quite a bit, in our previous discussions. So I guess I'll open it up to comment, because the main change is around number 2, of treasury investments.
sorry, just before, I just got a quick question under number 2. So what institutions are Standard & Poor's BB would that be worried about?
Building society.
And that's the only one?
Oh, no, I don't know that that's the only one. I haven't looked into it. Most banks are.
Sorry, Brenda, you would
So just grammatical, under the 2 treasury investments, 1, 2, 3, point number 4.
Yep.
If you read it out, the maximum amount to be invested, the wire building society.
Yeah.
With.
But surely, why have we got that?
I left it in there because it was always in there.
But we've already got the terms of investment in the first one, which should actually then cover this. And if Waipa Buildings start to increase their credit rating or more active in this, then
I agree with that.
So I'd like that.
I would be happy.
I think it's just an odd one to have. It's almost
to take that out and have,
pecuniary against them.
yeah, and have it covered under the actual credit rating.
Sorry.
So we will just take that point 4 out.
Yeah.
Because it's actually covered in the Standard & Poor's rating,
It
either
is
being
too.
an A or a BB rated institution. I guess it's around putting more. So saying if it's a more risky investment, then we want to mitigate the
So it might be, ABC Finance. Why are we picking on Waipa Building Society?
Yeah.
So we're currently going with.
I still think that we need to have a maximum in there, as we discussed earlier. And I take comments around the table, but I.
So maximum invested with.
45.
Okay, so we'll put back in the maximum amount to be invested with any one approved institution is, what are we thinking?
What are the numbers, just going around the table?
So
So this is the maximum amount that can be invested in any one.
I think Pam was more comfortable with 40%, isn't it?
Well, anything between 40 and 50%, I would not go over
But-
50%.
What would be easier for you in terms of, because if you get to a 40% and you're over a little bit, and you said we're very seldom get to 40%, would you be more comfortable with 45?
Yes, I would. I think as long as we're, so what would happen if we exceeded that? All that would happen is I would need to report it to FAR as part of my report and with an explanation as to why. So if my explanation was because I got favourable interest rates here, then that's kind of the explanation. So,
Which is what Katrina's currently doing, so any time.
but it's quite low.
But also given in the Treasury investments area that we are putting in place safeguards anyway.
Exactly.
So I think we could probably be a bit more relaxed to give you the flexibility to take advantage of better interest rates, not have to report every time it's breached, and it's ridiculous.
That's my feeling.
So I would go with more than 50%, given the safety of New Zealand banks. This may have to be reviewed in 5 years' time. If there's
Absolutely.
but I don't see a risk as such there, but it gives you flexibility to maximise income. But I tend towards the higher level.
Garrett, what are your views on it?
I'm just nervous about knocking ourselves for too long, but obviously it's not going to happen. And if you do have the flexibility to move, but does it need to come back to us all the time?
No, that's the whole point.
But if you had the
If you had the authority.
50, it wouldn't have to
No,
come
it
back.
wouldn't need to come back.
If
So
you hit 45% or 50%,
That's all
over
right.
exceeded.
That would be-
that amount
Would it be highlighted and reported to FAR?
Yeah.
And I think we need that safeguard in there because it's looking forward, we may not be around the council table. And
Yeah.
how comfortable would we be if one, for example, one CEO decided that they wanted to put all of our money with one financial institution?
Yeah, but what I'm saying to you, Pam, is why is that more risky?
Well, we don't want Iceland to happen,
We don't want what?
and Iceland to happen. But we are putting a safeguard in there in as much as 50%.
Yeah.
Yeah, I think that's, but we also, or our CFO should be warning us, doing a competent job if the liquidity of banks is changing and we need to change that policy.
Yeah, but what Katrina's coming from is that if you put a limit of 50% in there and she feels that the one bank is going to give us a much better interest rate return, then we shouldn't look at that as being a risk because we're going to be
But
getting.
we're increasing from 30 to 50.
Yeah, I know.
But I would be very disappointed if you breached that, given the leeway we've given.
Yeah, so clearly what I'm saying, what I'm hearing from you is that you want investments split between different organisations, some level of split. Okay, that's
I
fine.
just want to make sure I just hear from everyone. Kat, did you agree?
At the start of the meeting, I would have really questioned why we have limits. But, I understand a lot clearer now that,
Did you have
safeguards.
a figure that you feel?
no, I think 50% is.
Yeah, see, as I say, I haven't been able to find a council yet that's put limits on amount of investment.
Not many councils are as
Yeah.
such good condition as we are.
But that's,
Ross, did you want to?
Yeah, we just need to, if we were to delete the last bullet point, then you've dropped the investment cap. I'm just a little troubled at 50%. I was having a quick dig through the Local Government Act and see if there's any prudent investor requirements. Public money effectively on trust.
Yep.
And so I'm uncomfortable with 50.
So I think that if you, for me, in my professional opinion, the risk is you've got much more risk in your credit rating of your institution than you have in anything else. So if you've got a C-rated credit institution, you should not be investing in them. And that's where your investment prudence comes in. You just shouldn't, because even a B, you probably shouldn't. Because it's just, that's where your highest risk is, and that's why we have these credit ratings, is they're a very clear indication of we should be only investing in those really low risk organisations, and not even contemplating any high risk, because we have public money.
Yeah.
And so what we're discussing is more around spreading that risk further by saying that banking, effectively what we're saying by putting a percentage on the institutions that we can invest in and the maximum limits with each one, is we're saying that some banks are more likely to fail than others, or that there could be a situation where one bank failed and the others didn't. And so we're limiting our risk that way. So what I'm saying to you, my opinion is that banks won't fail. The risk of that is...
Big statement.
Well, it is a big statement, I agree with you, but if a bank in New Zealand failed, do you actually think that the government wouldn't bail us out?
And in history, it said they do.
Well, no, not the bank. Well, yes, for history they do, but, you know, even in the last financial crisis, Canterbury Finance, which wasn't an A or probably a BB rated, was probably a B rated, the government bailed us out, so...
But if one bank failed, wouldn't they all fail?
Wouldn't they all fail? That's right, and that's the other thing, so it's like, well, and that's why I'm questioning why is this limit put in place, because it's quite, what's the purpose of it? If you're mitigating risk, are you actually mitigating risk?
Yeah, I actually agree with that, but the thing, I think it was Pam, the thing that changed me was, I think from a local government point of view, to have 80% of your funds in one institution is not going to look good.
Yeah, okay.
And it could be nothing more than perception.
Well, I think you sort of cover your butt a bit here, because you've got a long-term and a short-term investment. Well, long-term's a Standard & Poor's A rating, and the short-term investment is BB. So, you know,
Yes,
and your long-term's not a long-term.
No,
You're not.
it's only a year.
It's only a year.
Yeah. So your risk on short term is much less, because it's more flexible.
Yeah.
It's more liquid.
Yeah, which is true, and you often talk about this month.
Yes,
Yeah.
yes, absolutely, yeah.
Anyway, so Ross, what do you read?
Just,
Too many leaders in the room.
Yeah, just a quick look at section 105 LGA. It's pretty much up to us, Katrina. Policy that's been put in place specifying the mix of investments, acquisition of new, outline of procedures by which investments are managed, and how risks are assessed and managed. So,
Yeah, that's totally up to us.
yeah.
so just from what everybody's saying around the room, are we in agreement that we do put a percentage limit and that it be 50%?
Just with regard to that, I mean, it can always be reviewed.
Okay,
Exactly.
I do think though that I wouldn't, for example, I wouldn't be comfortable putting 50% of our investments with Wairau Building Society.
No.
And so, however, having said that, they are at the BB rating, so they would be short-term anyway, which for me is certainly at least
That
6
was my
months.
point.
Yeah.
And I think given that how we're getting these reports sent to us and done, I mean, Katrina and the team are doing a marvelous job, but I don't think I'll be looking at anything that's a little bit dodgy.
You'll still get your summary of investments.
Yeah.
I'd just like to make, one brief comment there, going back to what Pam said, that it is a bit of future proofing.
Yes.
So for example, if there was massive organisational change, new CFO, new CEO, etc., it just provides a level of.
I'm totally happy with those percentages. I'm just a little bit, do we need to put something around those?
Building society.
Well, as Alex said, we really have to identify them because we're singling them out, but yeah.
But you got, as I said, you got your butt covered because it's short, you're
Yeah, we
only
have.
short term.
Yeah.
And it's a BB.
Agreed.
So we're taking out the building.
Building
society.
Who's been builders?
Okay. Happy with that?
Yep.
Did we agree on a, did we agree on a cap percentage? 50%. That includes short-term investments?
Yes.
Okay.
But remembering, going back to the rating, so if it's long term, don't they have to be AA anyways?
And it's all about, I have to have regard to minimising risk.
Yeah.
It's part of that under number one. Minimising risk is one of the really key components.
So if you put in another bullet point under those things, so for short-term investments, a credit rating of Standard & Poor's less than BB could only be 10% of the.
I wouldn't consider anything less than BB.
No.
Wouldn't even
No.
consider it.
But of course, it doesn't stop you from.
Yeah.
Well, it does, because it has to
Yeah.
be A or BB.
Does it?
Or B, BB or B.
BB or BB.
And remembering a short-term investment, more or less is just a month.
Yep, 30 days.
Hips.
You have.
A degree.
He's a hipster.
So what else have we got in this policy? We've included under equity investments, we've included Wellington Water because we're now a shareholder with Wellington Water. That's
I
a,
don't think we have Airtel anymore, do we? They're not listed. in
oh,
the-
correct.
Got rid
All
of it.
right, missed that out. Thank you, Ross.
Okay.
I've added, where have I added? Under number 2, bullet point 1, I have added local government funding agencies so we could get, we can invest with LGFA. So I've added that in.
Yep.
That's the other major change. And I've also, of course, added that funds are going to be invested with the view of maintaining liquidity and ensuring that cash is available when required. Any
Any other further comments or?
Why is there investments in farmlands? Is that?
we
I was
have,
going to say Airtel.
If you have an account, you'll become an automatic shareholder.
but it's like,
Oh, right.
yeah,
Because it's co-opted.
yeah. And to be honest,
It's $1,000.
So that gives us the discount.
That's right. That is.
that's the only reason why we got that.
I think we got it when it was about $200.
Yeah, you're right.
Any other questions on that, or changes?
No.
So what will happen with this, if we're all happy with it, is this will go through council as part of the LTP process, but this will inform the other active members' decisions on the investment policy.
So do we have an answer about 616 reference to Intel as well?
Yeah.
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 6.6?
Yeah.
Oh, yes, it is too. Yep, got it.
You can see it somewhere, but I
Yeah.
just try and scroll down.
Okay.
So what we
So then we'll
will,
have to change that to be one equity investment, won't it, up to, yes, we've taken the Intel out. Council with no investment properties and only 2 equity investments.
Oh, I need to change because we've actually got more.
Yeah.
We've got civic farmlands and Wellington Waters, we've actually got 3. So I'll have to update that. Yeah. Yep. Over to you, Madam Chair.
fantastic, thank you, that was a good discussion.
Very good. Yeah.
Could I request a 5-minute break?
You would have,
I think we're just about done, aren't we?
you know,
No.
Maybe.
Not for 2 minutes.
do you want to?
Do you think you'll feel better? You'll be a better man.
Sorry, I refuse. I just,
1 minute.
because Katrina.
1 minute, I would have a minute. Go and have a puff on that nicotine. Go on.
Jeffrey's gone.
Okay, it's
I know.
now, it is now.
If you guys want to know what your rates figures are going to be this afternoon, then
It's 11 minutes, we're taking 3 minutes. Sorry. 3 minutes.
That was here. Is that what? And the little boys. Oh, here he is.
Yes, great, big. So everybody's now on to the action. Now, did anybody have some comments on the action items report? That is. So you all got that in front of you?
No, they're all pretty self-explanatory, the three of them were.
So the first thing I want to do is just receive the finance audit and risk action items report.
Yep.
Receive that. And all in favour?
Aye.
Just before we work through this, I've looked at the action items through back to June 20, and we have had on the action items draft strategic risk register, and I'm just a bit concerned that this has dropped off and not on the current action items. As of the 26th of June, it's reported that officers are working on this and will update on progress at each meeting. And this hasn't happened, actually isn't in the register at all. So I think this is a matter of utmost importance for us, and at a high level, obviously, on the governance role, and I'd like to see that have a much higher level of importance in terms of priorities to be reported to this committee. But anybody else got any thoughts on that?
I agree.
100%.
It's supposed to come back to us in February, and obviously this February is not in here, so.
Yeah, I'm quite concerned about this because it's fundamental for the financial and risk committee.
Yep, so there's two types of registers. There's the operational register and the strategic register. So the operational register we did present sometime last year, but we still needed to do some work on that. The strategic register exists but needs a lot of work. So they're two sort of separate things. So I completely understand Bar's frustration and that we need to prioritise this more. I think I'd like to ask what would be your recommendation on how frequently you'd like to see those two registers presented to Bar?
I think we had a discussion, there was some concern around the operational register and whether that should be publicly excluded. And my personal view is, I think, yes, it should be. And that was just for our information only. In terms of the strategic register, I mean, presumably once it's up and running,
The strategic-
it could be reviewed on every FAR meeting.
Yes, so that's the question, is how frequently do you want to review them? The strategic register, I would suggest, doesn't change as frequently as the operational register, which is more of a ongoing review. So my suggestion would be that the strategic register doesn't need to come to FAR as frequently, so perhaps every 6 months. 6 months.
With the caveat that should some extraordinary event occur, such as COVID, that obviously we could have the opportunity to bring that forward.
I think I would prefer to see it each meeting until we get our heads around it. And then once we've got our heads around it and we've got it where we want it to be, then we can look at extending time out as to what we're doing. But right at the beginning, because we haven't had any reporting on this for quite a while, it's going to actually take us a wee while to get our heads around it and get it up to where we're all thinking on the same. And so I would be more comfortable in it coming every meeting.
What I would suggest, do you think it's possible that we could have a strategic register by the next parliament?
That's Karen's responsibility, and I will have to take it back to Karen and Harry and get an answer for you on that. I would like to hope so.
Could we say that we would strongly recommend that we have a strategic risk presented to us?
I think you can do that, can't they see that?
Sure.
Would we not be able to get the operational one first? I think that's effective.
I think they're both really important, actually, to be honest. The strategic one is probably almost harder in a way to kind of put together.
That's what I was thinking.
But once you've got those strategic drivers for risk, then they don't change so much. Like, for example, a pandemic is this one. But the actual drivers of risk at a strategic level generally don't change much. The level of risk will change, but the actual items on there not necessarily. And they are usually more of a longer term kind of risk profile. So they're not as volatile, I suppose.
Because the other aspect of it, just as my view, that if a risk change, you need to look at the date of that change, the reason for it going higher risk or lower risk. And the last register I looked at, it didn't have that built in, and it's just challenging to look at
I would suggest that
software that they might use.
we probably need a workshop for the strategic register, but I don't know what you are thinking on that.
If we were to have a workshop on that, I agree that it's very important, but we would have to be after we've done our LTP. So we couldn't really get it a pretty.
I think Karen would probably agree with that.
I know the pressure you guys are under. We'll give a very short timeline with our LTP at the moment.
Yeah.
I wasn't trying to put unnecessary pressure. I just wanted to move up the list of priorities. So what does everybody else think? I think a workshop could be very helpful to try.
I think it would give us a better understanding.
Yeah, what does everybody else?
Strategic.
Well, I don't think you're putting undue pressure. I think this is a risk committee. And it's a massive part of it. And the first time it comes out, next time, which I presume will be the next meeting, right? So we will start to get our head around it again. And so it's critically important.
Yeah.
Ross, any comments?
No, nothing to add.
Do you think if you were to have a workshop on it, you should include all councillors?
I would suggest that you would.
Yeah.
Yeah. If you did have a workshop on it. However, having said that, there is actually a strategic risk register, which is very old. But we could look at reviewing that as a starting point, and then if the committee feels that a workshop would be appropriate, then go down that route.
Okay, because if I recall, Harry said that it was so old as to be
Non-usable.
non-usable.
Yeah.
But the criteria would be just old.
To be honest, I think the strategic register there was nothing on that there that was really strategy.
Oh, okay.
Yes, that was
They're all very strategised.
There wasn't a lot strategic on it, to be honest. I think that they drew a bit of a long bow on that one.
Could I suggest we leave it with Katrina and Karen to work out the.
Yeah, I think that would be good. So I will take it back to Karen, myself and Harry to have a meeting and to come up with a plan around that for you, and I will highlight the criticality and the importance of these registers to the committee.
That'll be good.
everybody happy with that?
Yeah, of course, that.
Kept shaking his head.
No, I think it's summed it up beautifully.
Yeah.
That's exactly what it is.
Exactly.
Brenda?
Not on the
risk register, but we're in the phase of like reviewing a lot of policies. And I just want to note that I was sorely disappointed that the grants policy was not thought through far. It's to do with finance, it's to do how we go about allocating finance, it's to do on how we govern ourselves around the allocation of. So I just.
The terms of reference, I did read it briefly.
I
They
think,
have to have members on.
Yes.
Yes,
It's
it's
a
a
subcommittee.
subcommittee, it's a subcommittee of
yes, it is. So the review of the policy is part of the long-term plan.
Yeah.
Part of having to do the long-term plan is to review these policies. And I think from Karen's point of view, she wanted to get a broad discussion about that grants policy and from all elected members. And because of our timeframes, it would be very difficult because there were so many changes to the grants policy to come through far and then to go back to council. Those timeframes were really, really short. And so I think the idea was that it should have, I agree, it should have. As I've tried to this is why I've tried to push the investment policy through for you. But it was really, it's just really our time frame.
So with regards to that, do we not have a spreadsheet of what our policies are?
Yes, we do.
And when they need to be revised?
Yes, we do.
Is this made publicly available so we as councillors can be on the ball next time, so we know that another policy is due?
They're on the website when they're due.
Yes, but they're grossly out of date. There are 65 policies I've been doing.
We're aware that they're very out of date. Yeah.
Okay, the points noted, and I agree with you. I
So,
know that Karen wanted.
Are you asking that we, that FAR almost wants a report on that, on the policies and?
No, it's not going to help.
That's not going to help?
No,
That's not going to
no,
help.
no.
I think FAR will be aware of how we're tracking.
Well, it is part of FAR's responsibility to look after those policies.
Maybe we have a list of the policy and their review date.
That's what I was.
And then
You've got the
they out at the side, if the officers know when they're going to review that, if they've scheduled that review,
Yeah.
have a scheduled review date in there.
Yep.
And that way we'll have an idea of when the workload's sitting.
And how we're tracking.
And how we track it.
Okay. Is everyone happy with that?
Yeah,
Okay.
you don't need a report on it.
No, not a report, but
It's
part of the next,
You can print that out.
probably will.
I guess it is, just going back to the action register, has anybody got any comments around that? How are we going with Bonnie Glen?
On the Glen.
Oh, we've got a big gully out there, the wall of them,
Ready to go.
rear to go. You just put a road out.
Do you know anything about that? Debbie? Debbie or Alex? Bonnie Glen, thoughts?
No, I haven't. I know that it's nearly past its use by date.
Yes, I know that too, but it's been like that for quite a
I
while.
would quite like this action to be updated
Okay.
and changed. Because what has now happened is that from the Ministry for the Environment, it's come out as the increase in the landfill levies that's going to occur, which will double. So it'll go up 100% on the 1st of July from $10 to $20. It'll go up to $30 or 300% in 2022, 500% in 2023 and 600% in 2024.
Which is why we're trying to reduce waste.
So from a risk perspective, though, we need to analyse that. I mean, this is a massive risk to our expenditure and our contracts.
Yeah.
And do 7-year contracts accommodate this requirement to decrease landfill? And how are we going to adapt to this? Because otherwise we're looking at a massive increase in levies without the ability to put it anywhere.
And one thing that concerned me was I wasn't sure when the contract ended, but it just says
I think it's 5 years. It's a 7-year contract with 5 years to run.
5 years to run.
So that's a risk as well if we can't change the way
No.
it's managed. So I quite like it. I think we do need to have enough capacity and everything. This is a looming problem for the South Island.
Were they going to investigate silver streamers to see how much longer?
It doesn't matter where it's going,
Yeah,
it's the cost
I
and
know,
the ability
I know.
to
Cost of
adapt.
disposal, yeah.
And because it stops being can we pass this on? Because what you're going to see is a massive increase in fly dumping, burning on farms.
Do we need this to go through assets and services?
I think it's both, but it
Yeah, it
still
is
needs to
both.
sit here to make
It's
sure
there
that
from
we
a
are
risk point of
assessing
view,
risk.
but it sits at assets and services in terms of the discussion around it.
Yep.
I think it's both risk and financial.
Yes, yeah.
Do we know what local bodies are doing over here?
No
All the
one's,
same.
everyone's running around in circles going, what do we do?
I just want to see a solution.
Because if there's less rubbish going there, then contractors are going to put their charges up because they still need to make the money they're doing.
But part of the contract, they can't do that.
No, but once the contract's
Yeah,
finished,
yeah, it'll
then
be
you're going
open
to have
to-
a massive increase. in-
She'll be open rather than,
We need to.
Okay, so what wording would you recommend that we have around that?
To increase the scope of the actions item to include the impact and risk to council of increasing levies and the ability to change our processes to accommodate.
Hey, is everybody happy with that?
Yep.
Yeah. So that's item 248.
that's not binding,
Yep.
it's just a reminder, isn't it?
Yeah, but we need to be acting now.
Oh, absolutely.
Okay, so no further comments on the action items? Okay, I've just got one further thing just to update you on. So I did a video with Georgia the other day, Monday, I think, yesterday. Just giving a brief introduction to FAR, what we do, members of the committee, and inviting people to participate and just a little sampling of the sort of things we discuss. So that will be up on the website, whatever the website goes on. So it's just that. Let you know, and I'll just, so C1, are you,
Sure.
give us a report?
So if you check your emails, you'll see that I forwarded you an email from Anna from Destination Wairarapa regarding what's been going on. But if you look at Destination Quarter, the marketing report, you'll see we're the only district, so I'm talking Wairarapa as a whole, so the only sub-region that is showing any sort of growth, any positive growth at all. So we're at 6% growth in tourism. This is a negative 21% for Wellington and nearly 30% for Auckland. So we're the only one performing well. And a lot of this is, and there's a bit of a thing that they're talking about, but what Destination are doing and how they're reacting to it. And I really think they've done an incredible job. The current, I'm going to talk myself to this, not Anna's words, because you've got it in front of you, but the current expectation is that international tourism won't recover till the end of 2024 to previous levels. So we still have to have a emphasis on domestic tourism. For the Wairarapa, I think we get the biggest chunk of benefit from the activities of Destination Wairarapa, even though Masterton does have a total tourism spend of greater than ours. I think ours is around about 80 million and Masterton Council is around 120 million. But if you look at you've got the comparative sizes of population, you know.
I know, but we're based on holiday to Master.
But they have domestic tourism as visiting family and they have 26,000 people as opposed to our 12. There is going on in the background, there is a murmur that the other two councils may be decreasing their funding of Destination Wairarapa. And I think that's a bit of a problem for us. If they decrease their capability, we're the one most likely to suffer from that. And so that's something for us to outside of this report to consider, and whether we need to increase in the LTP our potential funding to Destination Wairarapa, given we benefit so well from the activities.
We are certainly the big winner in DW. There's so much that we had to gain from South.
We do gain a lot from PWT, Positive Wellington, in as much as they do use us as part of their offering. So we get a blow-by benefit from their many millions that they spend on tourism. So I think as a wrap-up, we're doing very well. We're doing the best in the country. We just need to make sure that the impetus is not flagging as a result of decreasing funding from other areas.
What's the funding?
About 130,000.
135,000.
From
That
South Wairarapa.
we pay, South Wairarapa pays Destination Wairarapa.
And so how much do they get in total then? From all?
It's a variety. They're partially funded out of Trust House, tune of about 300,000. Masterton about 300, Carsten, I'm going to throw a dart at 30,000.
Yeah.
It's a lot less.
It's ridiculously small.
Although, so the difference, the reason that we do pay more also is because that they run our eyesight effectively here, and in the other councils they don't. So
No, Masterton does have a.
Masterton does, but Carlton don't.
They will be removing that, and that information centre will probably go to the Masterton District Council, I think.
Yeah.
Is in the plan. I've also asked what is the requirement for a RTO to have an eyesight, because the cost of running an eyesight is about 70 grand a year, because there are higher standards within the tourism, Ministry of Tourism for the eyesights. Whether or not we need an eyesight anymore, my understanding is previously there must be one eyesight per regional tourism operator, and we've got two in the Wairarapa, but do we need any? Because the visitation statistics of, with a change of 0 international going to 100% domestic, international tourism 1 in 8 would visit an eyesight, domestic 1 in 20. So are they more or less important now? Less. Should we continue funding it?
So what was the total then? Total funding roughly?
We do 135,000.
Yeah.
The total funding, gosh, we've got a financial report there.
Probably 35 letters to run the eyesight.
No, the Destination Wairarapa.
Oh, the Destination Wairarapa.
It's about 800 or 900.
800 or 900.
So you get about 300 from Trust House, another 300 odd from Masterton, 135 from us.
Yeah.
A few other grants.
And then they have 60,000, 80,000 for membership, which is, there's a membership organisation. I think I'm encouraging them to go away from that, because the cost to recover to collect the money from membership is about the same as the money they receive, but then they also have to show a differential service to membership.
Did Anna give you any stats on credit card spending in the region for this last quarter?
I'm not sure if it's included in that email, it was only just received it.
So that's, I received some information around it, and the spending levels are significantly.
They were talking 28%.
Yeah, well, one figure I saw was 34% increase over 2019. So
Just speaking from a hospitality point of view, a lot of people are using technology to find out what's available.
Which is why,
Rather than going to an
Galaxy 1 in 20 now for local domestic tourism is using an eyesight.
Yeah.
So getting less and less relevant, I suppose.
Yeah, and well, you can have an information centre. It's the additional cost of an eyesight.
Yeah.
Is the issue.
So if we look at that longer term than short term, will we need an eyesight when the international visitors start to come back, or will they be able to cope with just having
That's too big a question to answer 2 to 3 years in the future, and with the trade, I mean, it might be that everyone's adapted to an online eyesight, which was something we might want to push as a tourism organisation, as a tourism entity, New Zealand Inc., that everyone should be up to an app when they arrive. So I just see it as a ever declining service to tourists.
I think we shouldn't get confused between eyesights and information centres. They're different animals.
Exactly, and that's a good point, because we have an example in Greytown, Featherston, in Carterton, information.
Yeah.
And in our case, it's run by volunteers.
But the visitation for those is cripplingly low.
Yeah.
At the moment. It's like one per day.
There's, well, in Greytown during busy weekend, you have up to 40 people.
Yeah.
So it's not bad.
But
You run, there's no cost, it's zero cost. But there's just some few areas that's worth noting in New Zealand where you have very, very limited cell phone coverage. And therefore, if you're driving along wanting to tap into the information, it's a bit tricky.
So just quickly going on to the eyesight site, they've currently got over 60 eyesights nationally within New Zealand. It'd be interesting to see what that stat was 5 years ago.
I'm trying to remember, because I was running the eyesights in the wire 12 years ago. I think it was 1890, something like that.
It was a big organisation.
Anyway, Anna can actually come to the next meeting if we'd like you to give us a proper verbal update. Yes, unfortunately she was sick, so. Yeah.
And so, sorry, we've just got one further verbal report from Katrina on the customer satisfaction survey.
Yep, so this is on behalf of Karen. So we can't do the customer survey until we finalise the performance measures for the LTP, and we are wanting to do that this afternoon. And once we've done that, then we can do the customer survey, which is why we've got a delay in going out for the customer survey. But we do have to have it done to inform our annual report on the 30th of June. So it must be done before then. But that is her information about the delay in getting that done.
And we have a commitment to the auditors.
That's right, but there's no point, we need to know what our performance measures are before we can frame up what the customer survey looks like. Okay?
Fantastic, okay. Thank you so much, Katrina.
You're most welcome.
Thank you.
Thank you, everyone. And I declare the meeting closed.
We're heading back here at 12:30, are we?
Yeah. 45 minutes. Lunch.
Do we get lunch?
Next Thursday, Friday, I might go. Yeah, anytime, and maybe just.
Finish our singing.
I'll go in.
Yeah.
Okay. People, and get back here.
I don't know, just.
Thank you.
Oh, that's